So my last video went through the sort of 4 most important ratios that I think every business owner should be measuring and monitoring and tracking permanently in their business. But there are multiple ratios that depend on where your business is at and whether you're looking for investment or growth or other decision making. They're also pretty critical, but they don't get talked about as much. So I'm not going to do a deep dive into these here, but I would just like to highlight them. So we talked about gross profit margin in more depth. Well, net profit margin is how much of the turnover you actually keep after all of your expenses have been paid. Then you've got the quick ratio, and so that's a bit like the current ratio, but it's stricter. So, for example, if you're in manufacturing business or a distribution business or an e-commerce or retail business, this would be more likely to be used because it excludes stock and inventory, so they're not considered as an asset in the quick ratio. Stock turnover is a really, really critical one for retailers, e-commerce, and I suppose even hospitality and other businesses, because that measures how quickly you sell and replace your inventory. And if you're hanging on to a lot of slow-moving stock, then you're not able to turn that into cash. So it's massive drain in your cash flow. And if the sales are there and then you're buying other product to hit some potential sales, you can put yourself out of business very, very quickly. It's called overtrading. Return on investment is how much return you're getting from a specific investment or campaign. So you can use this when you're talking about marketing campaigns. What's the return on investment from the spend that you are putting in to try to win new customers? You've got your operating margin, which is it's also known really as EBITDA. So that's your earnings before interest, tax, depreciation and amortization. That's a mouthful for me to say. So basically that's profit from the core business before tax, interest, depreciation or amortization. I can come back to those sort of jargony type names in another video at some point. And asset turnovers, how efficiently are you using your assets to generate sales? So that's just a super quick whistle stop of those 6 accounting ratios that I didn't mention that people tend not to know so much about, but you probably should. Thanks very much and bye for now.